This is our Forex blog for May 21st, 2012, and like you've probably seen in our latest 2 or 3 Forex blogs, we're about to release a new feature that allows you to put some of our real-time only charts over top of blank placeholder charts. Let me just move this out of the way so you can see. And by linking these two together, see, chart, this is set to hot list rank option 1, which means it puts whatever's in here as you sort these. Number 1 currency would automatically be put on here, number 2, 3, 4, 5. And then by doing this, we can now allow the linking of real-time only tools to our hot list. So as you will see in a second, I'm going to sort this from strongest to weakest trends on the last hour. You can see the New Zealand, Australian, and Euro are the 3 strongest. CAD, Yen, and Pound are the 3 weakest. And it makes it real easy then to simply be looking for buys in the New Zealand, which has a really strong real-time trend. The 15 and hourly trend color strips underneath that are strong. Daily trend shifted up, but be aware that the weekly and monthly trend are, still down. The monthly trend is one of the weakest. So this is a trend that could maybe go from 1 to 3 hours, or in rare circumstances like today, all day. So the pound is one of the weaker ones in the last 2 hours. The yen was weak. So you want to buy the strong New Zealand versus the weak yen. Let's bring that chart up here so you can see. 2 hours ago, this showed it was quite strong. It's above the hourly. You have this breakout right here, went up about 25 pips. You buy the next pullback right here, went up 15 pips. And this is to a Fibonacci retracement level. Instead of spending 30 or 40 minutes every night doing Fibonacci analysis, Fib retracements, Fib profit targets on all the main 12 pairs, I do that for you. And so this is a major resistance area coming up to it from underneath, and there's likely to be selling there. As you can see, there was. So if you bought this breakout right here, you already have a profit target. That's exactly where it went. If you bought this pullback, anytime you see a move up with incredible intensity like this, the pullback with 1/2 to, in this case, maybe 1/3, 1/4, visually the weakness compared to the strength, it's very likely to continue. In this case, because of this major resistance here, it's only likely to go up 10, 15 pips before it runs into some major selling, and that's what exactly happened. So in this pullback case right here, you might avoid this trade or not take it simply because the weekly and monthly trend are down, and it's very likely to find resistance up here. The second strongest one is the Australian, so you want to do the same thing. You want to buy the strong Australian versus the weak yen. You can see this one actually got underneath the hourly, which is a sign of weakness, came back up. Again, its weekly and monthly trend are down, so you have to anticipate and expect less profit on trades where the longer term trends are down. They're very likely to run into resistance at these Fibonacci areas that I do for you each night, so you don't have to. Again, look where it happened. Look where the selling came in. So if you bought this at 78.05, you have a good chance of making 25 pips. If you buy this pullback right here at 15, you only have a good chance of making only 15. You can see this pullback had more weakness than the New Zealand yen, which is why our currency meter showed that that one was stronger. I'm going to be probably releasing this later this week. I put another option on here that allows you to order it in the way I prefer it, which is having the dollar and yen on top, and then looking at the other currencies for buy and sell signals. Usually you want to look for buys or sells in the dollar or the yen, and then find the strongest or weakest trend against that. You can see the New Zealand was really strong all day, except for the weekly and monthly trend. And for intraday traders, you really only need real-time trend to be able to profit off of it. If the 15 and hourly shift up, which they almost always do once you have a lot of intensity, then it's only a matter of time before the daily trend shifts up, and it's only a matter of time before the weekly trend shifts up. As you can see, that's what happened here. So the dollar was quite strong today, so you didn't really want to buy the New Zealand versus the dollar. It probably still went up, but not quite as much. You can see about a 15 pip move up here. If you bought this pullback right here, it just kind of went sideways. It finally broke out a little bit later and went up about 30 pips. You can see extreme strength right here, the pullback, very little weakness. That's a very big sign of continuation. There's no Fibonacci area up here, which is good, but our upper containment bands usually contain price. You can see, when it gets above those bands, they typically pull back. Hits a band almost to the pip, pulls back, hits a band. And because this is based on statistics over the last 20 days, what the average and maximum volatility is, and these bands are the maximum volatility plotted around the hourly moving average. So, they're supposed to kind of run out of steam there. Now, this could be one of those trend days, 1 out of 10 days, where it breaks these bands and keeps going and going. But most of the time, it's going to hit these bands and run out of steam. I'm going to end today's Forex blog by going over some tools I haven't gone over for quite a while. One of them is our FX trend reversal. And this allows you to put it on your chart and see different time frames data and different time frames trends, likely reversal signals, FX trend reversal. So I got the 15, 30, 60, and 240 minute. I have the 240 minute 8 pixels wide, so it's really thick. And typically when you get those big yellow 4-hour trend reversal signals, you're very likely within the next couple hours to have a 30 to 50 pip pullback. So this one was above, the euro dollar was above the previous day's high. You got that reversal signal and it fell back into the previous day's trading range, which is a sign of weakness. And from that point on, you're really looking for a pullback. It's very likely to pull back to the hourly moving average, which it does. So you see a nice little sideways rectangle pattern right here when it breaks down underneath the low right here at 90. Your profit target's down here at 58. And so you're risking less than 10 pips to have a very high odds trade that will give you 30 pips, and that's exactly what it did. When it comes down to the hourly moving average, keep in mind when currencies are above the hourly, they're more likely to go up. It's likely to find support here. Once it breaks down underneath the hourly and it can't get back above it, then it's more likely to go down, which you can see happen later in the day. So always be aware of those signals. They will add to your probability. This will be the last chart I show. This is a euro yen, and it's going up and it hits the Fibonacci profit target level. The light gray areas are fib retracement areas. The dark gray levels are Fibonacci profit targets, and they're very likely to hit these areas and pull back. As you can see, almost to the pip today, and then it pulled back really about 55 pips from that area. So if you're watching this in real time, you might want to look at a range chart, let's say a 6 pips per bar chart right here. You can see it hit that trading zone area, and then it had a pullback down. When it goes underneath that bar's low right here, let's say around 50, you get short, and you put your stop a pip or two above the high. So you're always risking less than 10 pips. And notice if you used our trailing stop to exit this trade, it got you out right here when it closed above here at 06. You're short this at 51, and you made 40 pips. If any time you can have a very high odds of catching 20 or 30 pips while risking 6 to 10, you got to pull the trigger, especially at very likely support resistance buy-sell areas like Fibonacci profit targets. Even if you don't know how to draw them on the chart, and even if you do draw them on the chart, usually you want to use 30-minute, hourly, 240-minute, or daily charts to draw them. You're not going to have them on your intraday charts that you're trading off of. But if you use our software, they automatically show up if you add the trading zones script, and you'll see them. Imagine not seeing this here by not having that tool on the chart. Let's remove trading zones, and you just don't know why it would stall there and automatically pull back 55 pips.